This is 95.3 Business Now.
A warm welcome to the show, everyone. It's Thursday, the 11th of January. I am Aramide Folarin Shaw. Let's get started. The Central Bank of Nigeria sacked the board of directors of Union Bank, Polaris Bank, Keystone Bank, and Titan Trust Bank on Wednesday at a meeting with the boards of directors and chief executives of the respective banks. The CBN highlighted issues of non-compliance and other infractions committed by the affected banks and then formally removed the entire board and the management team. There are indications that this decision by the CBN to dissolve the board and management of the four banks might be connected with the findings in the report submitted by Jim Obaze, the special CBN investigator who was appointed last year by President Bola Tinubu to investigate the monetary authority and related entities. In the meantime, the Central Bank of Nigeria has appointed an interim executive team that would be in charge of three of the four banks whose boards were dissolved on Wednesday afternoon. In a statement released overnight, the CBN named Yetunde Oni as the managing director and CEO of Union Bank and Manir Ubali Ringim as the executive director. For the Keystone Bank, the CBN named Hassan Imam as the new MD and CEO, while Chioma Mang would serve as the executive director. The financial regulator also appointed Lawal Omokayode Akintola as the MD and CEO of Polaris Bank, while Chris Onyeka Ofikulu will serve as the executive director. Now, the CBN says those appointments take immediate effect. Global ratings agency Moody's Investors Service has released a new report with a negative outlook for sub-Saharan Africa, citing credit risk arising from African sovereigns' large debt burdens compared with their revenue and the difficulty many will have refinancing their debts at affordable rates. John Walsh, an analyst at Moody's, says slowing global economic growth will weigh on Africa's commodity exporters while also reducing the sovereign's financial capacity to mitigate social risks. But there are country-specific positive developments such as ongoing structural reforms to strengthen institutions and governance. Cadbury Nigeria PLC has offered to swap its $7.7 million debt owed to Cadbury Schweppes Overseas Limited for more equity in the Nigeria-based business. In a statement issued on Tuesday, Cadbury Nigeria said it borrowed $23 million from Cadbury Schweppes to settle outstanding third-party loans to fund raw material imports and other input costs. The company is now seeking the approval of its shareholders to convert the loan into equity by the allotment of 402.08 million ordinary shares to Cadbury Schweppes Overseas. Cadbury Nigeria said it is facing challenges servicing the foreign currency denominated loans due to persistent foreign currency scarcity. The Securities and Exchange Commission has approved plans by the NESD Securities Exchange PLC to launch its digital securities platform known as NDSP, powered by BlockStation, a digital asset trading platform under the Regulatory Incubation Program. This move signifies a significant step towards promoting new age innovation, enhanced transparency, and deepening trust and inclusion in the Nigerian capital market. Commenting on this development, the managing director of the capital market company, Ekwokinde Longe, says NESD's goal is to empower millions of young investors with access to promising digital assets, ensuring they can make purchases confidently in a compliant and secure investment environment. Well, the Comptroller General of the Nigeria Customs Service, Adewale Adeniyi, has expressed a readiness to partner with the African Continental Free Trade Area Secretariat for enhanced trade facilitation in the country. Speaking to the low-grade trade volume in Africa, Adeniyi said that Africa's share in global trade is around 3 to 4% and that the NCS fully understands the importance of balancing trade facilitation and revenue. The customs chief also expressed concerns about how the African trade system remains stagnant around 14 to 15% over the last 4 years. Well, coming up after the break, Nigeria lost its top position in startup funding to Kenya in 2023. More on that after the break.
This is 95.3 Business Now. This is 95.3 Business Now.
Welcome back, everyone. Kenya overtook Nigeria in startup investment funding in 2023, with startups in the East African country attracting the largest amount of funding, totaling $800 million. An analysis of the big four startup investment in Africa, comprising of Nigeria, Kenya, Egypt, in South Africa, shows that Nigeria slipped from the first position it had occupied in 2021 and 2022 to the fourth position last year, as startups in the country raised a total of $410 million, representing 68% and the least amount compared with the other three countries. Joining me now to discuss this further is Ayo Bankole Akintujoye, the founder and chief executive officer of Caladium Consulting, a capacity development platform for MSMEs in Nigeria. Good morning to you, sir. Thanks for connecting in.
Thank you for having me. Good morning.
All right. What's your reaction to this development in which Kenya displaced Nigeria in startup investments?
Okay. So I have to be very honest with you. My reaction is lack of surprise because, and I think it's important to point out that we're a strategy company. And our strategy, we constantly do analysis and we forecast. We did foresee that this type of thing was going to happen because all the indicators pointed to it. Number one, the fundamentals were no longer adding up for investors. It became more difficult to, make returns because investments are done in USD. Revenues are earned in Naira. Conversion ratio, the Naira was becoming a lot more unpredictable. Returns and yields were becoming less and less. Exposures were getting peak. So clearly it was going to happen. Startup failure rate was getting higher in Nigeria. Exit, we saw a lot of exit from the economy. So it only made sense that it was going to happen at some point, right? And if we are not proactive in quickly arresting the reasons, the causes of this, we most likely will still see more going into the year.
Oh, so talk to me about the major drivers of funding for startups. What are investors looking out for in these startups and why?
Okay, so it depends on the type of investor. So primarily, investors are looking at the ability, irrespective of the type, they are looking at the ability of startups to generate income over a period of time. And when I say income, I'm talking about on a sustainable basis, ability to scale, right? Ability to reach a critical mass of customers and build the business to sustainable levels. But that's just one type of startup investor. Other types of investors who are looking at the ability of the business to make profit. Again, not everybody that looks at profit. Some only just look at your ability to scale, and as a result of that scaling, increase in valuation. So, just valuation driven. So it doesn't matter what the fundamentals are. Either I'm making profit or not. Am I able to replicate my business in multiple territories? Am I able to expand the brand? Is my value able to increase so that my original investment can then increase as a result? And that's what some are looking for. Others are looking for profit. Am I able to manage the business in a way that basic fundamentals of accounting, am I able to generate revenue and profit so that I can make returns on my investment over a fixed period of time, be it 3 years, 5 years, or thereabouts. Others are then looking at what industry am I in? Who is the founder? Majority of investors in businesses or founders that they like, right? Who is this founder? What's his background? Does he have a technical background? Does he have a co-founder who has a technology background, who can build code, or who can write code? And then they also look at the industry. A lot of the investors are industry agnostic. So if they're looking for startup investment, you need to read the background of the investors you're talking to. What type of investment do they like to do? Some prefer SME, some like renewable energy environment, some like fintech, some like health tech, some like social enterprise technology. So it depends, but I think those are majority of the things. Then, from a macro standpoint, you also look at the environment. How viable is the environment that you're operating in to make this business scale and to make it sustainable and to make their own, to protect their own investment, right? So those are the few things that investors look at.
So I think this is a big focal point for Nigeria now. It's important to also consider how can Nigerian startups, rev up more local and foreign investment funds. What needs to happen or change within the sector and the broader economy?
Okay, so I think what needs to happen really is for our policymakers to fix macroeconomic fundamentals. So what we've done is that we have addressed symptoms and not root causes of our economic problems. Now, the corrupt subsidy regime, the round tripping and corrupted foreign exchange regime, they were all symptoms and outcomes of the root cause. Now, what are the root causes? We simply do not have sufficient production. The real sector is weak. If the real sector is weak, the demand for your currency will be weak. Now, when I say real sector, how much are you producing and exporting? How much are you earning in tourism, right? The only thing that we focus on, the major thing that we focus on is really two things: crude oil sales, and diaspora remittances. And these are really not sustainable enough to expand our demand for FX. Now, if you not have sufficient liquidity in dollar supply, then your currency will be weak. And if your currency is weak, you have to find a way to either subsidize it or you will continuously devalue. And if you continuously devalue, then startups like startup environment and other investors will find it difficult to invest in your country. So our government, for the next 6 months to 1 year, must focus on fixing all of these fundamentals so that wealth can be generated and we can make more money in FX, right? And then wealth can be, more investors will come into the system.
All right, thank you. Ayo Bankole Akintujoye, the founder and CEO of Caladium Consulting. We appreciate your time this morning on Business Now. Do have a great day ahead, sir.
Thank you so much. Have a happy new year. Bye-bye.
All right. Thank you. Let's give you a rundown quickly of Wednesday's trading day. The Nigerian stock market paused its winning streak in Wednesday's trading session as profit-taking activities in major stocks like UBA that went down 9.97%, Transcorp 9.94%, Zenith Bank, GTCO, Accessco, MTN Nigeria undermined market performance. The NGX all-share index closed sharply lower by 1.4%. And across frontier African markets, the Egyptian main index declined by 0.48%. The Kenya BURS, positive performance 0.30% yesterday. In West Africa, the regional exchange of BRVM in Abidjan remained bearish with 0.11%. The Ghana stock market closed flat. And if you look into the Southern African region, the Zimbabwe Stock Exchange finished positive by 1.77%. The JSE in South Africa dipped 0.32% on the day. And now we move to money market. Overnight lending rate in Nigeria increased by 840 basis points to 15.4%. And that's as the central bank conducted its first weekly treasury auction in the new year. Yields fell sharply at the auction on Wednesday as the financial regulator allotted a total of 57 billion naira to dealers, with stop rates down 4.56% on 91-day paper, 5.78% on 982-day paper, while the 364-day instrument was down at 3.84%. Well, the Nigerian Treasury bill secondary market traded with bearish sentiment. Average yield advanced 19 basis points to 4.0%, and activities in the FGN bond secondary market was soft on Wednesday as average yield was flattish around 13.5%. Quickly a look at foreign exchange. The Naira regained a bit of lost grounds by 0.7% to 1,082 Naira 32 kobo against the US dollar at the Nigerian Autonomous Foreign Exchange Market. Well, that's your Business Now for today, Thursday, the 11th of January. I am Aramide Folorunshaw. Do have a great day ahead, everyone. It's bye for now.
This is 95.3 Business Now.